So today we're going to talk about one of my growth stocks, which is absolutely exploding in pre-market. The stock is up around about 25-26% at the moment, and Dlocal reported earnings last night, and they were fantastic. I think previously to this, we said that SoFi and Meta were the standout earnings from earnings season. I gotta say, I might have to give it to Dlocal now. These guys might have just produced the best earnings from Q2 earnings season, and today we're going to take a look at it. Funny enough, with Dlocal, obviously I was buying quite recently, but I mentioned about it on Monday's video about growth stocks to watch this week. And I pointed to Dlocal being as maybe one of the better valued growth stocks out there in the stock market right now. And then to have a 25% jump this week is obviously very good. And as well as that, it was up 6% yesterday as well. So that's nearly a 31% jump in the last 2 days. Incredible. So over to gambling.com and new holdings tonight. Hopefully they can maintain what Dlocal has just done. So we're going to take a look at Dlocal's earnings and how good they are and what upside could potentially left in Dlocal. This is going to be one more of the detailed, the nerdy video. So normally I do these on Patreon and go a little bit more into the numbers. Today I'm going to do it with Dlocal and show you what's going on and a bit more of the upside. So hopefully that is a little bit useful for you, and congratulations to any of you Dlocal shareholders. As well as that, I'll try to do an eToro portfolio update for you guys sometime soon. But if you do want to follow me into eToro, guys, links in the description as well. If you do want to sign up, there's a link in the description as well for that to sign up and join eToro if you want to start your investing journey. So Dlocal, absolutely incredible rally. We're up 11% in the last 5 days, and obviously we're going to have another jump today when the stock opens up. We're around about 25% up. Now, I've got to say, last night, I don't know if you saw it, but there was a point last night where these earnings came out. I saw the numbers. I went, oh my days, these are absolutely incredible. And the stock originally jumped up 10%. Don't know if you saw it, but there was a brief time where the stock pulled back to only 5% up. I was on trading 212 at the time, looking at Dlocal, and I was like, oh my days, I am very close to pulling the trigger and buying more at this 5% up. I was like, these earnings are very, very good. I thought the stock could be up as much as 30% today. And I was like, I was very close to buying. I never bought in the end. I tell you, I maybe should have bought when it had that little bit of a pullback to only 5% up. But as the numbers have kind of got out there a little bit more, the stock has rallied up massively. I got to say, the good thing from Dlocal, I think we'll talk about the other day, the valuation is just incredible, 14 forward times earnings. I think what's going to happen now is you're about to see a re-rating. I think everyone's going to see these numbers, look at the valuation. I think this is where Dlocal can very quickly, there could be a lot of excitement around Dlocal and a lot of people getting into it as we go on. I did post on Twitter, or X should I say, I still say Twitter, X, the numbers, and you can see here the revenue beat. We were expecting 229 million. Came in at 256 million. Adjusted EBITDA was supposed to be 55 million. They came in at 70 million. And this great thing in this business is a lot of this now is just thrown to the bottom line. It's such a profitable company, and a lot of the things that they have in place just throw to the bottom line. So you could see the point where the profit, or EBITDA in this case, grows a lot faster than revenue, and that's certainly the case. And the revenue guidance as well, we were expecting 958 million. They've just hiked that up to 1.01 billion on the revenue guidance if you take the midpoint there. And when you look at the EPS side, nice beat on the EPS, 49% year over year revenue growth, which you can see here, which is just incredible. Total payment volume now is expected to be 40 to 50%. Revenue growth of 30 to 40% here. If we do have a look at Dlocal's numbers, so right now they're expecting 31% growth on 978 million. So yeah, that's going to get hiked up massively. And obviously they'll probably go for about 35% growth, 36% growth now. But obviously, if they're giving the numbers out of that high side of 40% growth, maybe they're coming on that, really big high side there. If you look here, total payment volume grew 50% year over year. And they talked about EBITDA going up 71% at the moment. They're pointing to Brazil and Mexico doing really well for them at the moment. Now, what was also worth pointing out is net income won't show us that much of an increase because they did do a bit of change in their bond portfolio. So that will come as a loss, even though it's on impact, even though it wasn't an impact. They did say later on that so that was a profit of 46 million. They said if it wasn't for that impact, their profit would have come in at 53 million. Just just ignore that kind of one-time impact there, not really an impact. Free cash flow, probably more important number to be looking at right now. That was up 156% year over year, incredible. What was also impressive is the managing of the costs. So you look at the revenue growth here and the cost of the services. The gross profit was a nice big increase, and what they did is they didn't really increase the technology and development. They didn't increase the sales and marketing, and you look at G&A actually was down slightly. So yeah, really, really good cost management. Now, they did say this is going to go up a little bit more in the second half of the year, but I got to say that was one of the big concerns with Dlocal a while back, is that they weren't doing too much cost management, and that looks absolutely beautiful when you look at that there. Look at this here. So the company, I think people don't realise, is that Dlocal is incredibly profitable. So right now they have 20% profit margins, and they're still at the early stage of the ramp up. Like this, you could be talking about Dlocal where they get to 30-40% profit margins. But right now they sit on about a 19% profit margin. So they're throwing off so much profitability right now. If we look at the moment, they're expected to throw off 168 million profit this year. Now, if you do look at Dlocal on the cash and equivalent side, the cash and equivalents has dropped down by 30-40 million-ish. Now, you got to remember, literally like a quarter ago, 2 quarters ago, they just paid a special dividend out of 150 million. So the fact that they paid 150 million out to shareholders by a dividend, literally like a quarter, 2 quarters ago, and they've already nearly got back to where the cash balance is at, it just shows you the profit beast that this is. And that dividend as well that they threw off in May time, it was around about 5% divi yield as well. So if you've been holding this one, you're laughing today because you're up like 31% in the last like 2 days. But if you also had it 2 months ago as well, you also got a 5% dividend yield on top of this. And at the moment, the company is that profitable that I believe they're already looking at an annual dividend as well. So you potentially could get an annual dividend with Dlocal, which obviously is exciting here at the moment. Great thing as well, share-based payments down significantly as well. So we're getting diluted less to shareholders, which is great. Looking an interesting slide that was in the presentation is the potential for what Dlocal can come. So they're saying at the moment in the emerging market digital payment market size, from where it is right now in 2025 to 2030, they reckon it can double in the next 5 years. So this is a massive growing TAM, and they have potential to take a good chunk of it at the moment. You look at the growth expected in LATAM, a 16% CAGR. You look at Africa growing at around about 16%, and the Asia Pacific as well, growing at 13% as well. So yeah, really good penetration that they could potentially have going forward in these sort of areas at the moment. So they talked about in the conference call giving reason why net income was slightly lower, as we just talked about a little bit earlier in the video. They did talk about that they have got some 3 new licenses, so they are looking to expand into the UAE, Turkey and Philippines as well. So much more expansion for them to go into new countries at the moment. And they also announced that they did launch new multiple buy now, pay later products into the portfolio. So that could be another potential driver for more revenue further down the line, which is really good to see. Ultimately, like, what is left with Dlocal going forward? Well, let's have a look at some numbers on Dlocal. So 2025, 30% revenue growth. I would expect them to maybe come in this 30% growth, considering how much TAM that is out there for them to achieve. Obviously, the profit margins sit at 19% right now, so I'll put 23, 25, 27% profit margins in. I would expect them to scale up those profit margins as they continue growing and so much more flows to the bottom line. So I would expect profit margin expansions. I've got 20 times earnings in because I don't like assuming crazy valuations. I've guessed that they're going to open up around about a 4 billion market cap today. We'll see what happens. So yeah, looking at those numbers on the low side, 20% growth, a little bit of expansion on the profit margins, 20 times earnings, no crazy valuation, 146% upside. And on the high side, 297%. So this is the thing with Dlocal at the moment, is that even with these fantastic earnings and even with the big jump in share price today, it's actually not too bad value, which is the scary thing. Now, I think, like I said, we could start seeing the re-ratings coming in from Dlocal, and I could argue the case that Dlocal is a premium company. You know, a company doing these numbers, you'd expect to be a premium valuation. So we could see the point of view where Dlocal actually goes to a 30 times earnings, which is still a 5x from here. We could argue the case that Dlocal goes to a 40 times earnings, which is nearly a 7x from here. We could talk about Dlocal maybe becoming a 60 times earnings, which is still a 10 bagger from here, which is incredible. And that's perfect situation, 30% revenue growth, big rank up in the 27% profit margins, 60 times earnings, big valuation there. But when you start getting those 10x numbers coming up, that's quite scary, isn't it? But even, you know, let's take the profit margin down to a 20% profit margin here, and let's go to a 16% revenue growth. So, I mean, if you'd be very disappointed if they went to 16% revenue growth and 20% profit margin, trading at 20 times earnings. But even then, you get near the 100% upside, which is incredible, isn't it, when you look at it? So, with Dlocal here, like, we look at the stock today off these fantastic earnings, and great earnings. Yeah, they're great. The share price is up 25, 26%. You know, it was up 6% yesterday. You know, it's a great rally that it's been on. But it's actually scary where Dlocal is, because Dlocal, even with the jump that it's been on, it just got to way too low of a valuation, where it was, you know, a few months ago, $7, $8. Way too low for Dlocal. And it was a perfect storm where you had all these currency impacts, you had the customer negotiation going on, big tier customer negotiation going on at the time frame, take rate a little bit lower, little bit of a slowdown in the Argentina economy. You had all these perfect things like hit the stock, and it just, sometimes you get that with the stock. It's a perfect time where so many things hit it in the short term, and sometimes you get those great opportunities where you get a good company and it gets into these, you know, really low valuations. And you know, it's one that I've been buying a little bit of at the moment, and we're starting to get the rewards. And you know, I do look at the stock at the moment, and I think I'm looking at these numbers here, and you know, even without assuming, you know, big valuations, still decent upside. But if we see Dlocal really execute, where big growth, big expansion in profit margins now, and we see the metric expansion coming in where we're talking about 40, 50, 60 times earnings, we could be on a real winner here. And you know, this company has real big growth drivers in the next 5 years, and I think it's one that we'll come back to in 2030, and we'll see how they do. But it looks good for them, and I expect it to be a serious performer as we get towards the back end of like 2030. So I'm a happy shareholder. Great results, good to see the share price moving up in the right direction. But I think it still has potential, a lot of good upside here. And you know, I said at the start of the video, like I really consider when the stock went up 10% and then it pulled back to only 5% up on those results, I probably should have bought. But yeah, really, really good results, and well done to any of you Dlocal shareholders, because it's not been an easy ride. Like the last year, 2 years, you know, it's been a bit of a bumpy ride in the Dlocal, where the stock has not been, you know, suffered a little bit, you know, especially when the market's been going up. But you know, we'll get the financials are now coming together after those short-term impacts, and you're hopefully getting the rewards now, hopefully. So yeah, really good. 10 out of 10 earnings, 11 out of 10 earnings from Dlocal. Best of earning season from the Q2 period. Hope you enjoyed the video, guys. I'll probably see you tomorrow. I'm going to talk about a stock that I have completely sold out of. Saturday, I'm probably going to do either my UK portfolio or my eToro portfolio. And then on Sunday, I'm going to do the UK stocks I've been buying recently for you guys. So thanks for watching. Hope you enjoyed it. See you in a bit.